After touching a recent high near 25,700, the Nifty is now stuck in a tight range around 25,400. Is this the calm before a breakout, or a sign of weakness? In this video, we'll break down why the market is consolidating, what levels to watch, and how you can position your trades or investments smartly. Let's start with where the market stands today. Nifty 50 touched a new all-time high of around 25,700 recently. But since then, it's been bouncing between 25,300 and 25,500, a classic range-bound pattern. Sensex is showing similar sideways action, despite global cues being mostly stable. Meanwhile, volatility remains low. India VIX is calm, suggesting there's no fear in the market, but also no urgency to buy. This kind of market frustrates both traders and investors. Many traders get trapped in false breakouts, while long-term investors worry if they've missed the rally. So what's really going on here? There are three major reasons why the Indian market is currently stuck. 1. Global uncertainty. Trade talk outcomes between the US and India are still pending. Plus, the US Federal Reserve is cautious about rate cuts. That makes FIIs hesitant, and foreign fund inflows have slowed down. 2. Q1 earnings season. Early results are mixed. Investors are in wait-and-watch mode. Expectations are high, but delivery has been patchy so far. 3. Valuation fatigue. Let's not forget, Nifty rallied over 15% in the first half of 2025. Now, many stocks are priced to perfection. Smart money isn't bearish, but it's definitely cautious. Let's look at the technical setup now. Support levels: 25,300 to 25,350. If Nifty breaks below this range, we could see a short-term correction. Resistance: 25,650 to 25,700. If Nifty crosses this with strong volume, the next target could be 26,000. Bank Nifty is holding near its highs, which is giving support to the broader market. So here's the key takeaway. If Nifty holds above 25,300 and breaks out above 25,700 with momentum, we could be looking at a fresh leg higher. So which sectors should you keep an eye on in this market? Number 1. Banking and financials. Bank Nifty is outperforming. Top private banks and PSU banks are showing strength. This sector often leads breakouts. Number 2. IT and pharma. Global uncertainty has brought defensives back in focus. IT is benefiting from strong US demand and a weak rupee. Pharma is showing signs of bottoming out. Number 3. Infra and auto. The government's infrastructure push is supporting capital goods and infra stocks. Meanwhile, auto demand continues to stay strong in the domestic market. Smart investors are watching sector rotation closely, because when money moves, it always leaves clues. Here's how to approach this market. If you're a trader, use the range. Buy near 25,300. Sell near 25,700. If the breakout happens, go long only with confirmation, like strong volume or a daily close above resistance. And always use stop losses. Sideways markets can be choppy and deceptive. If you're a long-term investor, don't panic. Don't chase. Continue your SIPs in diversified mutual funds or ETFs. If you have lump sum capital, wait for dips to enter quality large cap and mid cap stocks. Avoid chasing overheated small caps. That segment looks stretched right now. In range-bound markets, patience pays more than prediction. Follow the trend, not your emotions. Now, what could spoil the party? Here are the key risks to keep an eye on. A sudden spike in crude oil prices. Currency depreciation or volatility in the rupee. Any surprises from the US Fed on interest rates, misses in Q1 earnings from large cap stocks, and of course, if India-US trade talks take a negative turn, markets may react sharply. The market may look calm, but under the hood, there's tension. Always keep a risk buffer in your portfolio. So here's the bottom line. Nifty is consolidating, and that's actually healthy. We're in a digestion phase after a strong rally. Stay alert, not anxious, because big moves often come after sideways markets. Let me know in the comments, which sector are you most bullish on right now? If you found this video helpful, like it, share it, subscribe to the channel, and don't forget to check out our next video. How to use options to profit in a sideways market.